Welcome to today's video technical update presented by CMS Forex. It is Tuesday, December 29th, 2009. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex market. There's some more quiet consolidation of greenback strength, and the Canadian dollar is also quietly advancing, but is now tested against the US dollar and the Japanese yen. We'll follow up on some US dollar crosses as well as Canadian dollar crosses. This video is being prepared at about 4:15 p.m. Eastern Time at the end of the US session. As always, euro dollar is the first pair, and today we have pretty much a similar action. We're consolidating dollar strength. Today there was an attempt to hit 1.45, but it failed. So there might be this is a first signal of continuation, but we'll see. Looking at the 4-hour time frame, we see that here this was yesterday's swing, and then today started like this, like these two candlesticks, pre-US session and then at the start of the US session, and then all of a sudden the market came down, and there was dollar strength again. So this bearish candle suggests that there would be further decline to retest the 1.4250 area. If you remember yesterday, we talked about a possible retest of this area in the previous European session, but instead that it pushed the market up. So now we may, with this candlestick, we may actually see that retest of the bottom here materialize. Then I'm going to see if there's bottoming action, and if there would be a retest or another rally to retest these retracement areas. You see, we are basically in ranging mode at the end of this year, and depends on with increased participation as the year turns. We'll see if there's going to be increased volatility, and if there is, that could be a continuation as well. So we're going to watch this consolidating action and see if it breaks once the new year comes. Next we have the pound dollar, which instead of congesting is actually expanding. See this sort of expanding pattern here, which is a very tricky pattern. You don't have any clear support resistance. So basically we want to wait until further clues. But looking at the daily, we see that this may actually be a continuation. See, before that expansion channel, we have been in a decline. And today's bearish candle is a suggestion that we may visit this 100% retracement area, which is the longer intermediate term support. And there's no reason at the moment to expect it to break. The only kind of reasoning you would have for that is this consistency of this decline. It's been pretty bearish, but as we've seen, even with these bearish candles, this 1.58 area, 1.58 area has been the lower bound of our support. See, the higher bound was up here around the 1.6 area. But right now the market is trying to reach all the way down to the 1.8 and maybe even 1.7 area. So from there we would look for bottoming action, and then if the market can establish a higher high, lower low in this daily time frame, then retest of our resistance up here is a viable outlook. So for now we need to continue to observe the market as it approaches a very important support area. Turning to the Canadian dollar. The Canadian dollar, as we mentioned in previous posts, has been very strong, more so than the dollar, as you see here, with the US dollar, Canadian dollar declining. So today we had a break, but at the moment this break appears to be a possible clear out. But if this trend line holds and the market continues, it's not a clear out, and in fact it sort of confirms the breakout. Okay, So that's where we are at in the short term. Okay, looking at the 4-hour time frame, we see this decline, heavy decline, and today we closed with a doji. So although the decline suggests, the momentum of this decline suggests possibly coming down further to test the 1.03, 1.02 area. Okay, but in the short term, there is a pause. We see that the market is slightly oversold, and maybe we are due for a slight correction. But maybe in the short intermediate term, we would still touch the support area here. Then from there, we may look for bullish signals, but we still have to be careful because we are in a bearish mode, in a sort of a consolidation within the bearish mode. So any kind of bullish signal needs some more confirmation. Unless you're doing very near-term outlook, then you basically have very near-term targets of possibly this consolidation area. If we're testing, if we bounce from here, then we may retest this kind of 1.07 area. But at the moment, we're still testing here. Now, if we step back one more time frame in the weekly, we actually may have the parity scenario revisited. You see, this is the 78.6% retracement. The market was in a congestion pattern for a good part of the summer, and now looks like it may be breaking out, but we have to be careful of a false breakout. If it does break out, we see all these projections target the parity level. So in a longer term, we may still, that the parity level is still viable, and that is until we break this congestion pattern on the top. See, we're breaking it towards the bottom right now. So basically, we have to confirm this breakout in the next couple of weeks. And if the market breaks above this, then we may start invalidate that parity outlook. But at the moment, we still have to keep that as a possibility. Finally, we have the Canadian dollar Japanese yen pair. We see here this triangle breaking in the 4-hour time frame, and we see that the projections, swing projection and this pattern breakout projection has been reached. It is also a bearish butterfly ABCD retracement pattern at the 127 retracement level, and we have a short-term reversal combination. Okay, so that's the short-term outlook. We may have some reversal in the Asian European session. Looking at the daily time frame, we also see a congestion pattern breaking. You see this triangle here broke today on the upside. Our other 4-hour congestion pattern was basically this one right here. So we have a fractal triangle. Now we have a intermediate or short-term resistance. We may have a decline from there. So now we want to validate our targets, which here we have two targets. Our very conservative one to the 92 area, and then we have a more aggressive one to complete a Gartley at the 78.6%, and this is a swing projection to the 97 to 100 level. Now first, let's to validate this target, we need to either break this this resistance, or if the market can't break it right now and retests the 86 area, if this holds as a support, then our target is more viable. So in the next few days, we'll see if the market can break through, and if it can't, we'll wait maybe a couple more days to see if this market can support it here at 86. And all this will probably occur in the first couple of weeks of January. And that wraps it up for today. Visit fxtimes.com for daily updates and technical and fundamental analysis, as well as educational live events. Once again, I'm Fan Yang, your technical analyst here at CMS Forex, wishing you good trading.